Shit show. Okay. Morning, everybody. This is Bryan Fryar with Tennessee Valley Federal Credit Union. Again, with another one of our seminars we're having this morning. With me, joining me is Tina Peters. She is a mortgage originator here with TVFCU. Hey, Tina, how's it going this morning?
I'm good. How are you?
Great, great. I love your background. Being outside is awesome.
Thank you,
Looks
sir.
great. And it actually kind of leads into what we're going to be talking about today, land loans. So you see the beautiful background there with Tina. So we're going to start into it here in just a second. But first, I'm going to do a little introduction about ourselves. Again, my name is Bryan Fryar. I'm the sales manager here in the mortgage department with TVFCU. A little bit about myself. I've been in the mortgage industry since about 1998. Been with the TVFCU since 2008. Been in different roles as far as the mortgage lending area. Been a mortgage originator and a sales manager. So just a little bit of a background about myself. And also, Tina, tell us a little bit about yourself.
I am a mortgage originator. I cover the Saudi Daisy and Dayton areas. I've been with Tennessee Valley Federal Credit Union for almost 6 years. I started out as a processor, and I've been an originator now for about 3 years. And prior to coming to Tennessee Valley, I was a stay-at-home mom for 7 years. But prior to that, I was a production assistant for a mortgage broker in California, and I did that for 5.5 years. So I have about 12 years experience in the mortgage industry.
Yes, yes. And Tina and I talked about this, for many times. We both veterans of the mortgage industry, seen some of the highs and some of the lows, many more highs than lows. So there's probably any situation we ever run into. But want to get into this about land loans. Actually, they're also called unimproved property loans. So short term for that, though, is land loans. What do we mean by a land loan or unimproved property? That's going to be, generally, it's going to be a property that is zoned for residential, and it's not going to have any improvements on it. It's not going to have any structures, any homes or anything like that. It is just vacant land. Most people buy this to either to build later a lot of times, or they just want some land they can maybe camp on later or something like that. Or they might have a home right now with their land. It may be adjoining the current property they own, and they just want to make sure that, they may, have plenty of land around their home because they might like living out in a little bit of the more rural areas or something like that. Or also too, it can be a good investment. They may want to purchase it to maybe sell it later on another time. So just kind of letting everybody know what exactly an unimproved property or land loan is. Also too, another one that comes up big with us is on unimproved property loans is people are purchasing it because they're going to build on it later. And that's a very hot topic right now, especially in the mortgage world and the real estate world. There are a lot of not a lot of homes right now that we're finding on the market, not just the Chattanooga, North Georgia area, but all across the United States. Mortgage rates are historically low still, and people are looking to buy homes, especially ever since the pandemic hit in March. A lot of people may be moving out of the urban area, sometimes moving more to the rural areas or in the suburbs. A lot of people buying homes right now. And plus, we're also seeing, the younger generation, the millennials coming of age in their late 20s, early 30s, and they're in the market right now purchasing homes. So it is a hot time to buy a home. It is a hot time to buy land right now. So that's something that it's a hot topic right now. So we're going to kind of talk a little bit more, and basically, Tina, I have some questions that you all have fielded for us this morning. Also, too, want to thank everybody for joining us. We have over 240 people registered this morning. That's a record for us. Plus, we have a ton more that aren't registered that are watching us this morning. So we really appreciate you being with us today, and hope you get something out of it. Before we go into the questions, because a lot of these questions lead into what we're going to talk about today anyway. But first off, just want to say, if you need to contact us, have any questions, we can be reached at our main real estate department, mortgage department phone number, 423-634-3667, or we can be reached at tvfcu.com on our website. And here at the end, I'm going to go over that again, and Tina's going to give her contact information as well. Okay. All right. So I'm going to try to touch onto this. We'll start off with the questions. First question we had was, what's the difference between a land loan and a regular mortgage? Again, I'll kind of go back into what I was just talking about a little while ago. A land loan or unapproved property does not have a structure on it that you can live in. And a regular mortgage is going to be a piece of land with a home on it. Now, they are both mortgages. They are both
Right.
mortgage loans, real estate loans. They have interest rates. They have closing costs. They have what else? Deed of trust.
Right.
Recorded at the courthouse.
Technically, any lien against a property, whether it's land or there's a residence on it, is considered a mortgage.
Correct. So it is a mortgage. A land loan is a mortgage. It's just on our vacant land loans or vacant land, unapproved property, there are no structures on it, which is going to lead me to my next question. Tina's going to answer this one for us about land loans not having any structures. What we might consider on a case by case basis. So Tina, I'll leave that to you, and you can go ahead and answer that one.
Okay. A lot of times some pieces of land will have maybe a barn on it or a shed, not a livable structure, doesn't have any water or electricity running to it. And that's not a problem. The problems we have is if there's maybe an old mobile home on it that possibly is not currently livable, but at one time was livable. Those type of structures would need to be removed from the property prior to closing the loan. Very certain circumstances, we might be able to make exceptions to do it after closing, but generally we want those structures removed prior to closing the loan.
Yes. And we do run into, like, people say, well, well, Brian or Tina, hey, I've got a structure on there, but it's just a storage shed or something like that.
Right.
I've seen some storage sheds that are just a small little barn that's wooden structure, not very large, not much larger than your living room. And then I've seen some that some people consider just a small storage shed can be a metal industrial building. So if you have something like that, do let us know up front what you're looking at, so we can know also too what we're looking at. But generally, it's going to be some type of structure that it is not livable, doesn't have running water toilets or anything like that. It can possibly have electricity, but we really want to be cautious with any unapproved property that does have a structure on it. So if you're looking at property and you see one that does have a structure on it, let us know. We need to know up front, what you're looking at and everything, because again, unimproved property is unimproved property. We want to stay as close to unimproved property as much as possible, but we will look at it on a case by case basis if there is some type of structure on it. So just be aware that you'll need to let your mortgage originator know, whether it be Tina or one of our other team members too. Next question we have on here. What are down payment requirements? Each lender is going to be different. TVFCU, we are very well known for our unimproved property land loans. We have probably the smallest down payment requirement in the Chattanooga area. I think that's been my experience. But what about you, Tina?
For sure. I haven't heard anybody else. Normally it's 20% down.
Yep. Some are 20, some are 30. I've heard of a few that are even 40% down minimum. TVFCU only requires 5% down. Generally, that's going to be on a case-by-case basis, but 5% on most loan products or land loan products. So 5% down. Those funds generally have to be in your name. So when you're talking to your mortgage originator, again, whether it's Tina or one of our other team members, let them know where your down payment funds are going to be coming from. That's very, very important. So 5% down with TVFCU. That is a big part of our name brand, are the land loans. Next question is going to be terms. What types of term do we have for our mortgage loans? It's an excellent question. We have a 15-year fixed rate term. So we have three different rates based on credit score, but 15-year fixed. It is not a balloon. So what do I mean by balloon? Some people ask, do you have a balloon? What a balloon note is you have that loan, but you pay it for a certain period of time, and then the balance comes due. So you could have a 10-year loan, but a 5-year balloon. So it's amortized on 10 years, your payment's structured that way. But after 5 years, you either have to pay off the balance or refinance it. So do run in that a lot, especially, I will say this with some of our competitors. They only do balloon loans on their unapproved property, whereas TVFCU, we do a fixed rate 15-year term. Okay, and we'll talk about rates here in just a second, but want to kind of touch on a couple other questions. Next question, I'll let Tina answer this one. Minimum or maximum acreage?
There is no minimum acreage. The minimum loan amount for land loans is $10,000. Generally, anything over 20 acres is sort of an exception. We kind of want to look at the property, and a larger than 5% down payment may be required. The one thing we are trying to avoid is agriculture, farmland. It can't be a farm, a working farm. That is not considered land as far as Tennessee Valley is concerned.
Yes.
It can be possibly zoned agriculture if it is bare land.
Yeah. Some talk like a hobby farm type thing. Some people do. They may, have an animal or two or something like that. Just as long as it's not a working farm.
Right.
But yeah, generally it has to be residential property in most cases. Next item we're going to touch on here, coverage area for TVFCU. Since we are a credit union, and this also kind of leads me to another thing too, is, and I've talked about this in some other seminars, with TVFCU, since we are a credit union, in order for us to do a loan for you, you do have to be a member of the credit union, and those requirements are on our website. So if you're not currently a member, which I highly suggest you become a member, you can go on our website and figure out and see about becoming a member. Basically, it's live, work, worship, go to school, volunteer, 13 county region, Hamilton County, North Georgia. So if you have any questions, again, it's on our website. Tina, I'm going to let you answer that one as far as our coverage area for our land loans.
Our coverage area for land loans is Tennessee, Georgia, and then in Alabama, just 2 counties, only Jackson and DeKalb County in Alabama. Correct. But anywhere in Georgia and anywhere in Tennessee.
Yep. So just stating, just as Tina was saying, Tennessee, Georgia, any area in that area, and then of course with Alabama, those 2 counties, DeKalb and Jackson County. If you see some unimproved property, let's say in California, Montana, I'm sorry, we can't do that, unfortunately. Maybe one day, we'll see. But for right now, just mainly the Tennessee, Georgia area and those 2 counties in Alabama. We do get a lot of requests for land loans, of course, Southeast Tennessee, North Georgia, because that's the base of our membership. But we do have some members that live outside of this area, or they are looking to purchase some land outside of this area too. So that's not a problem for us generally. And if you have any questions, of course, you can contact Tina or myself or any of our team members, and we'll be more than happy to answering those questions as far as coverage area and everything. Let's see here. We've got a few more questions here. How to qualify and where do I begin getting approved? Again, this one goes back to a lot of my other seminars that I've done this year, last year, all the years of my career. And Tina, she's going to expound this a little bit with me too, but I'm a huge fan of getting pre-qualified first. Right. You need to get pre-qualified, especially in today's market. And Tina, kind of lead into that a little bit. What you're seeing, people calling in and what people are looking at and the process a little bit too.
Okay. Pre-qualification is fairly easy. If you contact one of us originators, we will send you a link to our webpage, or you're welcome to go directly to the webpage and to the mortgage center. Select the mortgage originator who services your area, or just apply online through the main system, goes to our internet specialist. And it's just a basic application, asks for 2 years of employment or residency history, asks about your income and your assets. Once you submit the application, we are notified via email, and we'll give you a call to follow up and check on, verify that you want to do land, what you want your down payment to be, where you're looking to purchase. And then once we get the application, we go over it and we'll give you a call. A lot of times I get calls for people wanting to buy, let's say a parent wants to buy 20 acres. And then once they buy that 20 acres, they plan on putting a house for them, a house for their son, and then a house for their mother, all on that 20 acres. Now, you're more than welcome to do so, but what you may have problems doing in the future is refinancing. Say you allow your son to put a manufactured home on your land, and he wants to refinance that manufactured home. He's going to have challenges and difficulties refinancing that because he doesn't own the land. And Correct. If you buy 20 acres through us, our lien is going on that entire 20 acres. So if you then try to subdivide it, you may have difficulty subdividing it because our lien is on the entire acreage.
Correct.
So I get several calls about that. Somebody wanting to buy a large piece and then, making it family land, which again, you're more, we can't tell you what you can do with the land once you purchase it. But I always try to let borrowers know what challenges they may have in the future if that's their intentions. Because at the same time, I have people calling me who already have the land, in that situation, they want to refinance their manufactured home, but it's on their father's land and they don't actually own the land. Therefore, we can't help them refinance that home.
Yeah, and that goes back to the original thing I was talking about. When you're doing pre-qualification, you keep those lines of communication open with your originator. You want to let them know what your plans are, what you want to do in the future, because they can let you know, hey, this is what you want to do. You may want to plan for this. If you are looking, like in Tina's situation, looking at buying 20 acres, and then later on they're going to have their son and his wife build on one area, and then another, maybe a daughter and her husband or spouse, on another area, and they're going to build on one other area. They'll need to plan on, probably subdividing all that out to them, and of course, paying off that lien too, and that way they can chop everything up, and they can give it to their children and everything. So that way, that land can be in their name too. So. And it's very important just to keep those lines of communication open. Let your originator know what you're going to be doing. That way, they can kind of let you know what you need to do to get from point A to point B later on. So very, very important. Keep those lines of communication open. Let them know. Let your originator know what your plans are for the future with that land too. Because most people buying nowadays are not able to find a home. If they can find something, they found land. Hey, go ahead and invest in it. They may build on it later. They may sell it later. Right. So just something to think about too. And that's going to lead me in my next thing about as far as construction loans. Currently, right now, TVFCU does not have a construction loan product. We have had them in the past. We are revamping our current our construction loan product. So be on the lookout. We will have that out in the near future, and we will announce that on social media, advertisements, everything. So again, we do not currently offer construction loans. We will be offering those in the future. I don't have a timeline yet, but please be on the lookout. As soon as we have that, we will be rolling that out, and everybody will know TVFC will be back in the market as far as construction loans go. So, and that's going to lead me into my next question. How can land equity work towards a construction loan as far as loan to value? This one is kind of important too, because in years past when I've done construction loans, and I know Tina's done them in the past as well, the best case scenario a lot of the times are people that already own their land free and clear. They can use that as their down payment. The equity they have in that land can be used as their down payment for the construction loan. So it's very, very important if you are looking at buying land and then possibly building in the future, maybe 5-10 years. Let's just say, you and your spouse, you're married, you have kids in high school or college, and you're looking at buying some land, then maybe when they get out of school, you guys are looking at building your home that you're going to stay in for the rest of your life. Maybe either downsizing or that dream home that you want on the lake or up in the mountains or something like that. My suggestion would be, yes, we have a 15-year loan. You go ahead and buy it now, but try to pay that off as quickly as possible because you're building equity in it. And then if you're planning on doing that construction loan later, you can use that equity that you have in that construction loan or that land to use towards your construction loan. Because the way a construction loan works, let's just say, I bought some land, but I owe on it. There's a lien on it. There's a mortgage on it currently. And when I convert that over to a construction loan, with that construction loan, we're going to have to pay off that land loan, okay, to roll it into the construction loan. All right. If that land is already paid for, again, I can use that as equity and use it as my down payment, possibly, depending on what the loan to value it is and everything like that. But that's, again, if you're looking at buying land to build on at a later date, not in the next year or two, but let's say 5-10 years down the road, I would highly suggest paying as much toward that principal, paying it off as soon as possible. And Tina, the land loans that you see come across your desk, the applications, generally, what are the loan amounts or the purchase prices you're seeing? What, 30,000, 50,000, 60,000 on average, roughly?
I would say the average is 60 to 70. Definitely sometimes we see them higher and sometimes we see them lower. I've seen them as low as like $12,000,
Yeah.
for a small piece of land. Um, Now, as far as the size of the land goes and the size of the land loan, obviously that has to do with the acreage, how many acres they're buying. A half-acre lot in Chattanooga could be $80,000, where a half-acre lot in Saudi Daisy can be $15,000.
Yeah.
So it's all going to depend on where you buy.
Where you buy, yeah. And everybody asks, well, my down payment, that's where we were talking earlier. Generally, our minimum down payment is 5%. So basically, you're going to take that purchase price times 5%. So a little bit of simple math there to let you know how much your minimum down payment is going to be. So if you're looking at a large piece of land, let's say it's going to be, $100,000 purchase. 5% of that, of course, is going to be $5,000 down. And those funds, remember, will need to be in your name, some type, in a savings or in some type of retirement fund or some type of account. If it's with the credit union, it's in a share account. We hope you keep it there. So next item.
I just want to touch on that. Gift funds are not allowed, so you cannot get money from a parent or a spouse, grandma, to purchase the land. The funds do need to be on your name, or that person can join the application with you and be also a buyer of the property.
That's correct. That's correct. And many people have asked me, why is that, Brian? Because when I bought my house, when I live in, that, I had a gift from my parents, and that was allowed. And that is allowed with all of our other mortgage products. If you're buying a primary residence, then gift funds are allowed. However, investment property or unapproved property land loans are considered a type of an investment property. Right. So same thing if you're buying an investment property, say a duplex or something to rent out, that's considered investment property. Those funds do have to be in your name and cannot be a gift. Again, people have asked me, why is that? And, I'm one of those people that like to know the why. The why is because, if you're buying investment property, it is a riskier loan for the lender. And they want you to have some skin in the game. They really want you to have some skin in the game because you are investing. If you're investing, you need to be putting a little bit towards that. Again, TFC only requires 5%, whereas some of our competitors require 20 and 30%. Some 40%, and that is because of risk. They are looking at risk. And you may be a great borrower, and that's fantastic. You have great credit. We'd love to see you guys. But again, you do have to have a little bit of skin in the game as far as putting some money down. Okay. The next item that I'm going to just touch on, and then I'm going to talk about some interest rates after we get through with this part. But this one comes up quite a bit. I'm going to let Tina answer this one, but closing costs. A lot of people ask me, what are my closing costs going to be? And Tina, let you answer that one if you would.
Okay. Closing cost, as far as the lender cost goes, we do charge a 1% origination fee based on the loan amount. We charge a $295 processing fee, a $75 tax service fee, and a $24 undisclosed debt monitoring fee. We do not charge an appraisal fee, which is generally $450 to $500, sometimes more depending on the size of the land. TVFCU does cover the cost of that for you. We also cover the cost of the initial credit report fee. Title fees are going to be the same regardless of the lender. Generally, the seller and buyer decide on which title company they want to use, and their fees are their fees. Recording fees, transfer tax. So again, there's not a formula to calculate what your closing costs would be. You would just need to talk to a mortgage originator, and they can tell you either once you do the pre-qualification application or give you a guesstimate of approximately how much they would be. Yes. And we do not escrow for taxes on land. You do have to pay the land tax on your own, so that is not included in the payment.
Correct. And again, people always ask, what are closing costs? And it is going to depend on your loan amount, where you're purchasing the property too, because as far as transfer taxes, recording fees, et cetera, can vary, state by state and county by county. So do keep that in mind too. And you're responsible for your own taxes, whether they be county taxes or county and city taxes. So do keep that in mind as well. And also too, Tina was saying, we can give you an idea of what your closing costs would be as far as an estimate goes. Once you have, if you're purchasing and you have a signed purchase contract, we will provide you with a loan estimate. And it's going to give you a breakdown of the closing costs, just a rough estimate. Of course, closer you get to closing and everything, and then you go to closing, you'll have your closing disclosure, which will have all the fees, the final fees, and everything. And another thing to touch on that Tina was talking about, title company. Again, If you're purchasing, that's something that's negotiated between the seller and the buyer, which title company you want to use. We use most title companies in the Chattanooga, North Georgia area. So again, choose that. Cost wise, title companies can vary. Most are about the same. Some are a little bit higher, some are a little bit less. Some give better service than others. I'll just be honest with you, especially these
Right.
busy times right now. And that's one other thing that I want to touch on too. And it wasn't brought up in the question. That's something that we have run into lately, and it's kind of been something that's been going on ever since the pandemic hit. We are at an all-time high as far as mortgage originations and loan purchases, which has put a lot of these third-party companies that we work with, appraisal companies and title companies. A lot of them are very busy these days. So have your expectation as far as from the time you sign the contract to closing. Be cognizant of that time period that it may take to get that appraisal back and that title work back. So again, work with your originator. Time is of the essence. Getting your documents together. And talking about closing costs too, Tina, documents. Generally, a lot of people ask, what's required. I know we send a list of documents that'll be required to our borrowers. If you can just kind of touch on some of the basic items they might need for a land loan.
For a W-2 employee, we would need 1 month history of pay stubs, last 2 years of W-2s. And then if you currently own your home, we would need a copy of the mortgage statement and the insurance declarations page on your primary residence and any other properties that you own. If you are a self-employed person or own rental properties, we would also need to see 2 years of personal tax returns, sometimes business tax returns if you're a business owner. One other thing I wanted to touch on as far as timing goes, the main issue that we run into with timing is surveys, and we definitely need to talk about surveys. So surveys are not necessarily always required. However, if Mr. Jones has 150 acres and he is subdividing that acreage and selling it off in 5 to 10 acre lots, we are definitely going to need a survey.
Yeah.
The current tax records will be for that 150 acres. So the survey is needed once it's subdivided for the title company to draw up the legal description and also for the appraiser to know what he's appraising. Mm-hmm. If it is a lot that has not been subdivided, chances are the legal description is fine and we may not need a survey, but that is generally determined by the title company. If they are okay with the legal description as is, then we don't need a survey. Sometimes there's an old survey on record that we can use. But the problem that we're running into right now is the lack of surveyors and timing on surveys. Yeah. Some are taking months to even get on somebody's schedule. Yeah. I have a person who's wanting to buy land right now, and the surveyor can't even get out there until July.
Yeah. Yep.
So that's where we run into problems. Unfortunately, we can't have a loan sitting in our system for months on end waiting for a survey. So sometimes what we have to do is withdraw those applications and wait till the survey is at least on the schedule, maybe a week or two out, then we can get that process started, because we're basically at a standstill. The title company can't do what they need to do without that survey, and the appraiser can't do what they need to do without that survey. Yeah. So that is definitely a challenge that we run into with the land loans on those larger acreages that are being subdivided.
Yeah, and that is very good advice, because I've seen some of those come across my desk as well on the larger land loans. You definitely want to make sure you've got your surveys down pat, everything looks clean and everything. And you'll want to if you're using a realtor, which I highly suggest, they want to make sure the listing agent, if they have a realtor as well, is communicating with their seller. And everybody has that information, and has everything ready to go, because there can be snags along the way, and sometimes we run into them, and it may take, you may not be able to do the loan right now, but it may be in a few months once everything gets straightened out, and go ahead and proceed. So good advice right there.
The other thing to go along with the survey, Brian, is the perk test.
Yeah.
If
Oh
you're
yeah. Yeah.
buying the piece of land that you want, your intention is to build on it, you definitely want to get a perk test to
Hmm.
verify that the soil can be built upon.
Yeah.
Now,
Yeah.
we do not require the perk test unless, of course, the contract indicates that a perk test is required.
Hmm.
Then we will want to verify that the perk test was received and that the land perks, and you still want to move forward with the purchase.
Yeah.
There
And
have been times where the land does not perk and
yeah.
the buyer ends up backing out because they're not going to be able to build on it.
Yeah, and I've had that happen. In years past, I had an employee here at the credit union. She was looking at her and her husband looking at purchasing some land, and they were waiting on the perk test to come back, and because they were going to build on this land later on. Well, the test came back, was not good. It was not. There were some issues with the soil contamination, and they had them go out there and retest again in several areas, and again came back. There were some issues with the soil, and they would not and did not want to build on that property because it could have caused some health problems. So that's great advice, because that does come up, especially if you're going to be living on that land later on. You want to know what's in that soil, and it could cause a problem for you later on. So
Right.
definitely want to check that out too. Um, Probably one of the last items we're going to talk about, when we've already talked about down payment and everything. Some people always ask me, what's your minimum credit score to qualify
That's a good
for
one.
a vacant land loan, unapproved property? 660 is generally our minimum credit score. And again, doing mortgage loans, we generally pull all three of your credit bureaus. We're gonna take that middle credit score. And also, if you're two borrowers on the loan, we're gonna take the lowest of the middle credit score, so 660. Again, though, if your credit score is below 660, we might make an exception. We could look at that. It's going to depend on many other factors. Credit score is not always just the end all be all on credit. So just do have that in mind. But we do have a minimum credit score of 660. Rates. This one always comes up because rates are very low right now. They have been low since COVID came along. Mortgage rates purchasing a primary home have bottomed out to historic lows. And I know in my career, and Tina's been in this business a very long too as well, and she's seen the higher interest rates, and what we're experiencing right now are super low rates. And yes, the rates purchasing a primary home can be in the 2% range, 3% or so. I think our 15-year fix, if I'm not mistaken, Tina, was what, 2.5, right around there still.
Right.
It does fluctuate based on market conditions. Now, vacant land, unapproved property, those rates are going to be a little bit higher. Reason being, again, it is investment property, which is a riskier loan. So rates right now, if you have a 720, and these are rates for today, okay? 720 credit score or better, 5.36. That is a fixed 15-year rate. If you have a 680 or better credit score, but still below 720, 5.85%, again, a fixed rate. And then 660 or above to right below 680, 6.15%. So you can see our rates are very competitive. Our credit score dependent. Also, again, your loan is not just your credit score either to qualify. We're going to need to look at your income to see if you qualify. Generally, we don't want your debt to income to be above 43% of your gross income. We can go up a little bit higher on a case-by-case basis, just looking at the loan. Again, it's going to depend on your credit, your overall job, how long you've been at your job. Sometimes we look at assets too to see the overall loan picture. And we do have, it's another thing that leads me into TVFCU. We have our own in-house underwriting and our own in-house processing here in Chattanooga, Tennessee. So we don't have to send your loan off to Birmingham or to Dallas to have it underwritten or processed. We are all local. All decisions are made locally here in the Chattanooga area. So that being said, that gives us a lot of leeway because we know the area. We know North Georgia. We know Southeast Tennessee. We know Tennessee. We know Georgia, Alabama as well. So we can make those decisions, and our products are tiered, and they are designed for our membership too. So again, want to thank everybody for these great questions. Really, really good questions. We hope we covered everything. If you want to give us some feedback, if you want more detailed information, we'd be more than happy. We might have to come back for a part 2. I know every time I get done with these, I always think of something else that I forgot about. And I know Tina and I know we'll talk later. Why didn't we mention this? Why didn't we mention that? But it is great information, and unimproved property loans are huge with TVFCU. So
One thing, Bryan, is a lot of people ask whether we sell our loans or keep them at the credit
Yes.
union. The land loans we absolutely keep at the credit union. They are not sold to an investor.
Correct, correct. And what that means is, and Tina is saying is, credit or TVFCU does two types of loans. We do loans that we sell to a secondary market investor, and then we also have our portfolio or our in-house loans, which these land loans are in-house loans. Our in-house loans, if they stay here with the credit union, we do not sell those to an investor. You will make your payments to us here. So just an FYI, the land loans do stay with TVFCU. Okay, so that's going to lead me to our last part here. Give a little bit of contact information. If you want to reach us and have any questions, just general questions about any kind of mortgage loans, whether it be vacant land or anything like that, you can contact Tina at this number right here, 423-634-3667, or you can reach her online here. If you can't get a hold of Tina, you can reach any of our team members. Any of our originators can help you with a land loan or any other type of loan that we do, whether it be a purchase, refinance, cash out refinance. Oh, and that's one thing on our land loans I do need to touch on too. On those, we only do purchases and rate term refinances. We do not do cash out refinances on land loans. So just an FYI. So
we don't do refinances on land loans at all anymore. We just do purchases.
Oh, sorry about that. Thanks for correcting me. Sorry about that. Yes, just purchases. Sorry. As you can see in the mortgage industry, things change quickly. So, and I have to remind myself, we are just doing purchases right now. So 95% loan to value, 5% down, very, very important. And also too, if you're not looking for a land loan, we do all other types of loans, equity loans, primary residence and investment property. We do have a winner in our drawing, Chuck Thompson. Thank you very much for registering. We're going to be getting a hold of you. You do have a $100 Visa gift card. So Chuck, congratulations. We will be announcing another webinar coming up for next month. So please stay tuned. This one has been recorded, so you'll be able to watch this and share this with others. So again, thank you for joining us, Tina. Thank you for joining us today too. Really enjoyed it. Everybody take care. Have a great day and call us for that land loan.